Hello and welcome to Martyn Lucas Investor. Today we have got the inflation data coming out. This is one of the most important pieces of data. Why? Because it's PCE. This is what the Fed love to have a look at. This is how they decide if they're going to reduce rates, increase them, or keep them the same. We are expecting a September rate cut, but only if this data comes in at consensus or below. I'll explain what that all means. I'll explain what we're looking for. We'll be having the data live on the show. So thank you everyone for tuning in. This will be what decides whether XRP continues in a bull market or if it continues going down like it has been doing for the last couple months. Let's get straight into the show. Thank you everyone for tuning in. Today's going to be a great show. I know it. Why? Well, straight after this, we've got the fundraiser event for our charity partner in Uganda. But before we get to that, we need to focus on the markets. If you have just tuned in, hit the like button. Please do subscribe. There is a lot coming for you guys. We've got the fundraiser event. We've got the $1,000 XRP giveaway. We've got prizes being handed out left, right, and center. But that all happens if you guys subscribe and stay with us throughout the shows today. So XRP's chart, unfortunately, is not looking how we want it to. We have been spot on, but I wish I wasn't spot on. Why do I say that? Well, because we did identify a big breakout. Perfect. It did go up quite dramatically as expected, but it only reached the main target of this breakout. We could have had $10 within 7 days, but we didn't. Why? Well, because the sentiment changed, because manipulation came in play, because big whales, some sold, and because there was fear in the market. Does that mean it's the end of the bull market? No, I don't think that means it's the end of the bull market. I am still in the camp that in September we get all-time highs for XRP, and in October, November, we get an altcoin season for the rest of the market. Again, not financial advice. Nothing I ever say is financial advice. Please do not buy or sell based off anything I say. Crypto is a very risky game and most don't win. But here is the all-time high that we saw in January 2025. We're basically most of the way through the year, and we are lower prices than we were at the beginning of the year. So it is pretty disappointing price action, but not unexpected. We expected to go to $3.40. We predicted the 50% correction that occurred. We predicted this breakout that hit our main target. We predicted the breakout at 50 cents all the way to $3.50. We were part of all of this. So now I'm going to give you my next prediction, which is not changed. So if you have been watching the show, you know what my prediction is. If I go over to this this XRP chart, it will be a bit clearer. I said that in late July, when I saw this double top at $3.65, I said we're not going to get $10 within 7 days. We've topped out. We've got a double top. Are we not live? I thought we're live. When is going live? I think we're live. What do you mean, when is this going live? We are live, no? Are we live? Someone let me know in the chat. Someone's just asked, when is it going live? We're live, right? Are we live? Or have I just talked to myself? Let me know in the chat. Are we live? Yes, we're live. We are live. Brilliant. Cool. Okay. Thanks, guys. There we go. There comes all the comments. Brilliant. So why did hello on time? We know more. Are we live? When is it going to go live? Why? That's really put me off. We're all good. We're all good. I'm not talking to myself. I love it. Perfect. I thought I was just talking to myself. Oh god, that would have been terrible. That comment really put me off. Anyway, back to the XRP chart. So double top, that ended the predictions of a $10 within 7 days, because some people said that's a crazy prediction, but realistically, when XRP starts moving, it will move fast. We went from 30 cents to $3 in a month, so we can go from $3.40 and do a 3x rather than a 10x within 7 days. Very, very possible. But unfortunately, we got that double top. Our sentiment changed. I actually very much quickly said after that double top, I'm going to expect August is going to be a sideways moving month. I expect in late July we're going to have a correction down to $3, but in the month of August we're going to range between $2. Martyn would let you know if you weren't. Well, he wouldn't know if I was live or not. He wouldn't know if I've clicked the button. Abandoned. Anyway, I expected a range between $2.62 and $3.40. That was my prediction for the month of August. I said the case is going to come to an end, but that's not going to push us to all-time highs. And I explained why I don't think that. I took you back to the time a couple years ago where XRP was deemed not a security, which was actually more important than the resolution of the case. To some extent, obviously the resolution of the case allows ETFs and all sorts of institutional adoption long-term. But on the short-term news, the fact that the case was closed wasn't going to be bigger news than XRP being deemed not a security within itself. So I said I'm expecting the court to end the case, final dismissal, all of that sort of stuff. But I don't think we will break into all-time highs. I think we'll go to $3.40. Here is the day where that got announced. We went from $3 to $3.40, and then I said we'll sell off. And ever since we've sold off. This is the month of August. We're the 29th of August. It's happened. In July, I told you we'll get a pullback at the end of July. August will be sideways moving. It's happened. What's going to happen next? Well, obviously, I can never say it's guaranteed what I'm going to say. I'm just putting my predictions out there and hoping I'm right. And if I'm not right and we change our opinion over time, it's fine. But what I think is going to happen in September is all-time highs on XRP. I don't think the beginning of September, I think we could potentially come and test this $2.62. We didn't actually come to $2.62. We came as low as $2.70. But we might drop down to $2.62, especially if today is bad news. I still expect all-time highs in September. Not the first half, second half. Why am I saying that? Well, because in October, our prediction has been for the last year that XRP ETFs will be approved in October. No sooner, no later, October. I've got all the dates. I'll share that with you on the channel. As we get closer, we'll prepare more for that. But mid to late October, about 7 XRP ETFs will all get approved. In my opinion, I'm very, very, very confident of that. But what does that mean? Well, if you look back at Bitcoin or Ethereum, when... I'll just go to this camera because I'm not even showing the chart. When you look at Bitcoin or Ethereum, when everyone started realizing that the ETFs are going to come out, the rumors started coming out and people got very confident. Well, especially with Bitcoin, you saw a buy the rumor event. What does that mean? Well, that means in the event that everyone starts clocking on to the fact that October is when the ETFs will be approved, which I'm sure everyone will. There's actually more talk about it now as well, which is what I expected. I expect the price of XRP to make all-time highs based on that rumor. So I think the rumor of an XRP ETF, everyone FOMOing in, everyone getting excited, will push XRP towards all-time highs. Break $3.62, potentially even head up to $4.20 before the ETF's even announced. Once the ETF gets announced in October, I imagine a small sell-off, sell the news. But very much soon after that, because of the inflows, because there's going to be other altcoin ETFs, because everyone's going to hear about it, because it's going to be on the news, that all of these altcoin ETFs are going to be approved. Because remember, it's not just XRP. There's Litecoin, there's AVAX, there's Solana, I think. There's quite a few altcoin ETFs. That, I think, will fuel altcoin season. And then in October, November, we have altcoin season. That's my prediction going forward. It's probably not going to be completely accurate. It might be completely wrong. And even after what we witness in about... Let me put the time on the screen. None of this could happen. We could have already topped out on XRP. Bitcoin could have already topped out. We might have already got the altcoin season with Ethereum just hitting all-time highs. If the economy is in bad shape and if inflation has popped up a lot. That's why I'm focusing on today's event, which is the inflation data coming out in about half an hour's time. So let me put that on the screen. So just so you guys know when that's happening. So data is coming out at, let me see when, what time it is now. Inflation data is coming out in 35 minutes. So let me put that on the screen. There we go. Just so you know when that data is coming out. So that data could be the end of XRP's bull run. Why? Well, let me get into what we're expecting today. Then I'll come back to the Bitcoin, XRP, Ethereum charts. But we need to understand what's going on behind the scenes. This is the boring part, but this is the part that's really important. This is what's going to affect everyone's portfolios. And it will affect everyone's portfolios, what happens in 34 minutes. So do stay tuned for that. But you need to understand it because this happens every so often. You need to understand what you're investing in, why the piece of data move the market, so you can be better prepared for them. So again, from our newsletter, deep dive, soft landing or sticky prices, why Core PCE matters. We're going to go to Bloomberg. We're going to have the data right in front of us. About 35 minutes from now, Core PCE data is coming out, and you can see the impact is massive because this is what the Fed use. But what are we talking about? What are we hoping to see? What are my thoughts? Yesterday, we did cover data. It wasn't anything amazing, but it was pretty good. It was better. All three metrics. We looked at PCE, but quarter over quarter. That data is a little bit out of date. Today's data will be will be about last month, so it's much more in date. It's not quarter over quarter. It's month over month, year on year. It's also the data we get today is what the Fed actually use. As they've said, it's their preferred gauge. So yesterday we got PCE quarter over quarter. We looked at the data. It was slightly better than we anticipated. Brilliant. Oh, no, we didn't anticipate anything. We were just waiting for the data. But I said if it's slightly lower, then that's a good thing. And it was slightly lower, which was a good thing. Jobless claims came in very tiny, but slightly bit lower, which is what we want because we don't want the economy in bad shape. We don't want people losing their jobs. We don't want a recession. So that was good news yesterday. Jobless claims were slightly lower than consensus. Perfect. And then we also, what else did we have? We had, GDP. GDP was a little bit better than we were hoping for, which is brilliant. The economy's in good shape. That's from the data from yesterday. Nothing was massively surprising, but even because it was a little bit better, you saw all-time highs on the S&P 500 because of that data. But today's data is, I would say, twice as important than yesterday's data because this is exactly what the Fed, what Jerome Powell will be looking at to decide whether we're going to have rate cuts in September or not. And we are going to be tracking this, which tells us the odds of a rate cut in September. Currently, they're around 85%. That could drop to 0 today. That can jump to 100% today, depending on the data we get. So yesterday, Q2 GDP revised up, perfect. PCE quarter over quarter was a touch cooler, perfect. Jobless claims were slightly lower, perfect. And it nudged the S&P 500 to fresh all-time highs. It was a nice backdrop, but today's core PCE month on month is the decider. Consensus is 0.3% month on month. If you don't know what that means, it basically means the analysts around the world are expecting that inflation is going to come out at 0.3% month on month. That's the data they're expecting. What does that mean? Well, it means that's what the market is pricing in. The market is pricing in where we are at the market, right? In the stocks and shares and bond markets and global markets is based on this figure here because this is the best guess, best estimate we have right now is 0.3% month on month. So that's what the market's prepared for. So if it's massively above that or massively below that, the market is not expecting it will react massively. We're also going to get the year on year. And that year-on-year number right now is 2.9% that we're expecting year-on-year inflation. Obviously above the 2% target, but not too far above. So, what data do you want to see? A softer 0.2% or lower instead of the 0.3% would reinforce the September cut and more to come narrative. That will say, brilliant, we're going to get rate cuts in September. Brilliant, there's going to be more rate cuts that are going to come. If you are here watching the show, please do hit the like button. If you haven't done so already, please do subscribe. So perfect. That's what we're looking for. We're expecting 0.3. If we get 0.2, 0.1, even negative, the market will blow up. It will be amazing. Not blow up to the downside, but blow up to the upside. Unless there's some little bits of other data that gets released that's more concerning. You can never just be 100% certain because there's a lot behind the scenes as well, other bits of data being released. But essentially, lower inflation will be great. It means that the Fed would love to cut rates because they want to protect the jobs. And there's no point keeping them high if inflation is low. Let me just turn that off. So we're also watching personal income and spending. That's another data point that comes out a little bit later as well. So there is small bits of data that come out later, but the most important, as you can see, is obviously this PCE that comes out in half an hour on the show. You can see the impact is high. All the rest of the data is not as important. All of yesterday's data, none of it was in high impact. This PCE number is what we're going to be focusing on. That's the most important data we're going to get. And you can see month on month consensus 0.3, year on year is consensus 2.9. Above 0.3 will be concerning. Market will probably go down. Below 0.3, market will probably pump. At 0.3, the market will probably go sideways and up, and that means the bull market's still on. If we do get horrible inflation and we get maybe a 1%, 0.8%, 0.5%, then that could be the end of the bull market. So I am going to be watching this very closely, and we're going to be doing it live together. So let's continue. Why did the markets rally yesterday? Well, GDP, the Q2 second estimate, upgraded to 3.3% annualized from 3%, beating expectations as consumer spending and IP software investment ran hotter. Imports fell after early front loading, which mechanically helped growth. Inflation within GDP, PCE prices quarter over quarter annualized were revised down to 2% and core PCE held 2.5%, a smidge friendlier mixed for stocks. Labour initial jobs claims ticketed down 229k versus 231k, still low, consistent with cooling but resilient markets. Price action, growth, inflation tamish, the S&P 500 and Dow notched record closes. That's why we got all-time highs on the S&P, because everything was slightly better than anticipated. Imagine if it's much better than anticipated. We can have XRP at all-time highs next week. In a couple weeks. Again, that's what I'm hoping for. That's what I'm expecting. So today, PCE, 30 minutes, especially it's core PCE. It's the Fed's North Star. Why does the Fed care so much about PCE, and why are we focusing a whole live stream on it? Well, the Fed's target PCE inflation. Fed targets PCE inflation, not CPI. You might have heard of CPI. You might have heard of PPI. Fed look at it, don't care about it. They care about PCE. Core PCE, which is what we're getting today, it strips out food, it strips out energy, and it maps better to underlying services prices the Fed believes are stickier. Think healthcare, financial services, insurance, super core services, including housing. The reason they do that is because food costs are pretty volatile. Energy costs are pretty volatile. What really makes up the sticky part of inflation, the part of inflation that is probably not going to come down or not even come down, grow at a lower rate? Well, it's the underlying core. Healthcare never gets cheaper. Financial services never get cheaper, or the inflation on those steadily go up at a high rate. They don't disinflate. For healthcare, financial services, insurance, and those are the super core parts of it. So that's what the Fed look at to see what if inflation is going to be sticky. So policy is set on the trajectory, i.e. whether monthly prints where annualized are trending towards 2%. Their idea is we want 2% inflation. Their idea isn't we want 2% inflation this month. They just need to see it trending that way. They don't want to see it trending back towards the upside. That's been the fear at the moment. The fear is tariffs coming in are going to trend inflation towards the upside, or we're going to be very sticky at 3%. Those are the fears. However, if we start seeing inflation come down lower than expected this month, or trending towards 2%, whether that's in a year, 2 years, as long as it's trending that way and not moving trajectory to the upside, that's all the Fed wants to see. They don't want to see 2% inflation this month. That's unrealistic. That's not what they're expecting. So remember, this is what we're expecting: 0.3% month-on-month core reading. That roughly implies if we're getting a 0.3% month-on-month reading, that will equate to about a 3.6 annualized if repeated. that is too warm to be sustained comfortably. So that's what we're saying. If we get a 0.3%, yes, that's what consensus is, but we can't have 0.3% for the rest of the year, because that basically means we're back at 3.6% annualized inflation, and that's not trending towards 2%. So we are expecting this month, but they're not expecting that going forward in later months. If we start trending towards 0.17 or 0.2% month on month, that aligns with 2% year on year over time. That's why we're so excited to see if we can get a 0.2% month on month reading this month. Remember, we are expecting 0.3% consensus. 0.3% gives us an annualized rate of 3.6% yearly inflation. Too high. Fed won't have it. Fed will keep rates where they are, if that's what they expect for coming months. However, if we start seeing prints of month on month around 0.17 or 0.2% essentially, that will align to a 2% year on year inflation. And if you just remember what I said the Fed are going to look forward. They're going to analyze the trend. If they start seeing 0.2% this month, even though we're not at 2% inflation today year on year, what they're going to do is they're going to format it forward and go, wow, in a year's time, we're going to be at 2% inflation. Why the hell are rates so high right now? We can afford to bring rates down at a quicker pace and even do a 50 basis point rate cut in September. So that's why we're hoping to see inflation towards that 0.2 month on month reading, because that will give the Fed room to cut rates. But even with all of this, the Fed has we've covered the Jackson Hole event, and they basically said, they never confirmed that there's going to be rate cuts, but they basically implied that their policy might change because the labour market is starting to look weak. Remember, if the labour market looks weak, you lower interest rates. You do not want a recession. You don't want to break the economy. If inflation is high, you keep rates where they are, or you increase them because you don't want inflation to break everyone's pockets. If inflation's going up, jobs are going down, you're stuck in a sticky situation, you'll probably have emergency rate cuts, inflation will go loose again and then go rogue again, and then you have all sorts of problems. So that would be the worst case scenario. Inflation up, jobs down. That we're talking recession, we're talking 50, 40, 30% corrections in the market. It doesn't look like that's happening yet. It looks like inflation's starting, well, it's still sticky, but it's not out of control, and jobs aren't out of control yet. Neither is out of control yet. So they've got time, and hopefully by the time they start cutting rates slowly, inflation comes down and jobs are no longer a problem. What's happening today? When's the data coming out? What are we going to do? If you have just tuned in, please make sure you are subscribing. Please make sure you are hitting the like button. We've got a great event coming up straight after this, so please don't go anywhere. I'll explain all of that in a second. What are we on now? 99,993 subscribers. Of course, some people played some games, but I'm sure we'll get to 100,000 again today. We did it. We celebrated. There's no way. Anyway, let me just go back to this. So today's setup, what's coming up and when. You can see the timer right there. 21 minutes from now, we're going to get the data. This is going to have a big impact on most people's portfolios. What time is it happening? What are we looking out for? So 8:30 Eastern time, you've got the time there in front of, it's in 21 minutes. Core PCE, month on month. The consensus is, this is as I explained, what analysts are looking for. 0.3% year on year, 2.9%. We want to see it lower than that. We want the number to be lower. Previously, I've sort of traded this. I'm not trading it today. I've got too much going on. And this is a terrible trade. Well, it's not a terrible trade, but I really wouldn't recommend it because it's a very high risk. What I've done previously, if I know everything about it, and if I see a massive loss, if I see like inflation at 0.2, 0.1, even negative, I go long on the market because you expect the market to go up, and then I quickly close those positions. Again, I'm not telling you to do that. If you've never longed or shorted anything, please don't do it. It's just a bad idea. But I've done it previously. I'm not doing it today, just in case anyone was wondering if I'm trading this live. And previously, when it came in really hot, PPI, remember that day? I got very surprised. I was hoping to go long. But in fact, PPI was so out of whack. It was so high. The market's correct about 3 or 4, 5%. I went short straight as I saw that data. But we're going to cover that data as soon as it comes out. So it is going to be a volatile time, especially if we don't just get consensus. 100,000's back with just one more sub. Are we going to do it? 999. Come on. Come on. Who's going to do it? Come on. Who's going to do it? Who's going to do it? Is anyone going to do it live on the show? 9997. Are we going to get it? Are we going to get it? We might get it. I don't know. I think I need to go off the screen. Please tell me the bull. Please tell bull run is over. We don't know. I mean, there's no way I can come and say 100% the bull run's over. I have no idea. I'm prepared for all situations. Remember what I always say, be prepared for the bull market not to be over, be prepared for it to be a mediocre bull run, be prepared for it to go to $10, $15 to $5 or big targets, be prepared for a 50, 90, 80% correction, be prepared for a sideways action moving market. I know some of those options will be less appealing than others, but be prepared for all of them. 100,000 once again. There we go. We've done it. Look at that. We smashed past it. Okay, where were we? Yes, so that's happening in 18 minutes time. 0.3 is what we're expecting. I don't know what. Got so much going on. 0.3 is what we're expecting. If it's lower, it'll be good for the market. If it's higher, it'll be bad for the market. It's as simple as that, but we're going to get that data soon. And that's core we're looking at. So what would be good? Obviously, let's celebrate once more. Says stage your life. Yeah, look how many party pop. Have you guys seen how many party? Get ready for that. Bullish, yeah, we know basically 0.17, 0.2% will be bullish. It was a bit sort of best case scenario. Markets will pump. Base case is what we're expecting, 0.3. That's what the market's priced in. Markets can live with it if the detail's cool. So people will look deeper into the data and then decide if it's 0.3, do we want to sell off or do we want to buy more? That will happen within the fine details and we'll hear about that. If it's over 2.4%, then that's risking sticky services. That risks a September rate cut. How yesterday's did? Yeah, I'm going to skip through this, but I get to this point. So there's lots of risk within the market right now, and that's why I'm prepared for all situations for the end of the bull market or the continuation of the bull market. If you actually look at my prediction here, I still give a 60% probability to what a soft landing scenario. A soft landing scenario, in my opinion, is basically an alternative way of saying bull market's on, all-time highs, altcoin season. We want a soft landing scenario. And that's still my base case. This is still what I'm expecting will happen. A 60% probability in September we'll get rate cut, 2 to 3 rate cuts by the year end. Equities will grow, tech will outperform, crypto will be supported by risk on sentiment, and everything's fine. No recession, no massively sticky inflation. We're all good. However, there is risks. If we get this inflation up today, if inflation's above 0.3% monthly, you can expect the Fed not to cut rates in September. They haven't promised you a rate cut. They don't owe you anything, really. You can expect there not to be a rate cut if inflation's really bad today, above that 0.3% monthly. So the market will sell off because they don't want that. They've already priced in a September rate cut at this point. Another risk, labour market collapses. They're too late, just like Trump says, too late, Powell or whatever Trump calls him. They're too late, labour market collapses, we get an emergency meeting for a rate cut. That's an awful thing. Don't think an emergency rate cut meeting is a good thing. Rate cut doesn't automatically equal pump for the market. If the labour market's collapsing and they suddenly outside an FOMC meeting come and do an emergency rate cut, that means they're in trouble, that means they're panicking, that means they're too late, and that means the market's crashing. So that's another risk, labour market collapse. Financial stability event. Credit, again, that's with the banks. There's a few risks that you always need to be aware about. The political pressure. Are they going to fire people from the Fed? Is the market going to lose confidence in the US? Is the bond market going to crash? Is the market going to crash because of that political pressure and the independence being moved away from the Fed? Because remember, the Fed is supposed to be a completely independent, not political. Some may argue they are political. Some may argue they're independent, and Trump's making them political. I don't care what you think, but that's a risk. The political pressure is a risk. Recession indicators, if you start seeing the yield curve inverting, or we've got GDP down for 2 quarters, then we're in a recession and people will panic. But remember, recessions typically have been a good time to buy. But there are risks. But what I'm saying is, in my opinion, there's a 60% probability that we have a soft landing with everything amazing. Tech continues to run, Nvidia continues to go to all-time highs, crypto goes to all-time highs, Bitcoin goes to 150, 200,000, XRP goes to $8 to $12, Ethereum goes to 7,000, then 10,000, 12,000, altcoins do 10, 20, 50x's. 60% probability of that in my book, but I'm not blind to what the other situations are, and that's why we cover data events like today, because we get a head start from people that don't understand any of this. If the inflation starts going up, if tariffs stick and they're just not a one-time thing, if it's sticky, then this is the sticky inflation risk. 25% probability of this. What does that actually mean? Well, we might get some sell-offs in the high-risk sectors, which is the stock market, or risk-on segments, which is tech, and obviously crypto falls in that category, and we might have a temporary end to the bull market. We might have 50-60% crashes. We've had that previously into the 2021 bull market, and we went higher. So it could just be a temporary 50% correction on Bitcoin, Ethereum, XRP might go a bit lower, and then you get that final altcoin season. We saw that in 2021. Most people know what I'm talking about. If you don't, go back and look at the chart in 2022, 2021, where Bitcoin crashed 50% and then it came and made a new all-time high, and that's when the altcoin season really happened. Even if we get this probability, there is just a chance we get a big correction and then we come back, depending on how bad and how sticky inflation is and how the labour market's doing. But essentially, this is a risk. There's a 25% probability in my books that inflation is going to continue to do upside, and then the trend is going to go up, and then the Fed doesn't want to cut rates. And then the worst case scenario is the downside growth, 15% probability. This is when the jobs collapse. This is when everyone will go, this is when there's evidence that Jerome Powell has taken it too far. You've kept interest rates too high, the job market is collapsing, there's a recession, this is a hard landing, the Fed will have emergency rate cuts, everything will collapse, everything will crash, we'll go into a recession, 15% probability. That hasn't changed. These predictions might change in 12 minutes time when we get the data. And why do I say that? Well, because this is PCE. This is a very important FOMC meeting we've got coming up. September FOMC meeting all depends on the data that's coming out in the next 12 minutes and 26 seconds. So that's what we're preparing for. If the data's bad, I expect XRP to potentially drop to $2.62, maybe today, maybe over the next week. That's if inflation is 0.4, 0.5%. We can expect another 10% correction, and then we'll have to analyze the charts, and we will come back and I'll give you my analysis. Do I think the bull market is going to continue or not? I can't make that assessment there on the spot because I have to digest all the data. But it certainly wouldn't be a good thing for inflation to be up. So make sure you subscribe, make sure you hit the like button, because after this event, over the next week, I'll be analysing all the data that comes out and make a decision whether I'm going to stay fully invested, because I am still fully invested. So that's XRP. Bitcoin is... if Bitcoin loses 108,000, 106,000, it can go below 100,000. Then people will panic, people get a margin called, and it can come down very fast. It can also go up very fast. Right now I am in the camp that hopefully inflation will be down. XRP will regain $3, and then mid-September we're at all-time highs once we get rate cuts. I still think that... Are you looking at the data on Chainlink today? No, Monterey team, I'm not. I'm going to be looking at on Bloomberg and on the financial calendar. But we're actually going to do that on the fundraiser event. So essentially what's going to happen in about 5 minutes time, I'm going to end the stream and then start it again, because we're going over to... Let me go to this screen. will go straight into the fundraiser. Oh, the scene was muted. Which scene? Oh, that's the wrong scene. That's I've accidentally uncovered something for the next show. Let me just see. I've got a scene muted for some reason. This one? No. How have I lost my? Where did that go? I'm very confused. Sorry, this scene was muted. We've got that event coming up. It's the XRP Funds the World event. It's a fundraiser event. All the money goes to charity. That's where the data is going to come out. That's where we're going to be going over to. So it's going to be very seamless. In 4 minutes time, this stream will end. The next stream will start. Same channel, same place, same style. We're going to uncover the data as it comes live. We'll tune into Bloomberg. We'll see how the market reacts. I'll give you my thoughts. But that's all coming up in about 5 minutes. We're going to switch from this stream to the next stream. It's already pinned in the comment section if it doesn't automatically take you there, but it should. It's getting close. How's the market's front running this, by the way, as well. So maybe some people have information, maybe they're selling it to buy it back up. And you never know. There's always manipulation before these events because some people know what the data is and they manipulate the market. But we've gone into this down. We're down 3% on the day. Let's see if the S&P. I think the S&P 500 is also down today. Yeah, the S&P 500 is down 0.27%. Remember, it made all-time highs after yesterday's data, and that was a slight beat. It was a tiny beat. It wasn't anything massive, and it wasn't the most important data, but that took the S&P 500 to all-time highs. Imagine if inflation on the most important Fed tool to see if they should cut or raise rates is much lower today on this data. The markets will explode, in my opinion, or they'll crash if it's terrible. So I don't know which one it is, but we'll find out, and from that data, we'll see what to do. But yeah, it's going to be a big event, but it's going to be on the fundraiser show. So let's get prepared to move over there. Let's do this. Okay, let me just make sure I've got that open. Okay, if you haven't subscribed yet, we've just hit 100,000. That's why we're going over to the party event. Look at this, 100,022 subscribers. So we're going to still cover the data, but we're all going to celebrate together, give you the analysis with a fundraiser party event. Still on this channel, that's where the data is coming in 7 minutes, but we'll go over there now, I think. I think now is a good time to get ready and go over there. So, I can hear you now. Yeah, sorry, I had that scene muted. Market is front running this to the downside. I wonder who knows what and if they're selling it to buy it back up or they're selling it because they know something. You never know with these things. They play around with the market. Classic manipulation, in my opinion. Again, I've told you what my thoughts are. Remember, the most important thing to look at is this. Consensus is 0.3% month on month. We want it lower. 2.9% year over year. We want it lower. And if it gets lower, we can get a massive pump in the market. If it's higher, then we've got issues in the market. Remember, I am still in the camp that base case is we get the bull market, we get all-time highs for XRP in September, we get all-time highs on a lot of crypto in October, altcoin seasons in October, December, and then we go into a bear market. But remember, that's my 60% probability. Upside inflation is a 25% probability, and downside jobs collapse recession is a 15% probability in my books. Again, I'm not an analyst. I did speak to analysts. I did get some news from analysts, but that's just my thoughts. So thank you everyone for tuning in. Literally don't go anywhere because in 5 minutes we're getting the data. But where are we getting the data? I don't want to confuse anyone, so I'll make this very simple. On this channel, in 1 minute's time, I'm going live, and then 5 minutes later, the data gets released. We're only switching show. We're switching to the fundraiser show because we just hit 100,000 subscribers. We'd hit it yesterday, we did have the party, but we dropped below because of some trolls. But now we're definitely solidified above 100,000. So I'd love to do this event because we just hit 100,000 on the fundraiser show. We will still continue with this and then we'll go into the fundraiser, but please do join me there for the data release. It's happening in 5 minutes. We're covering it live. I'll give you the link. We'll automatically take you there. So everyone join me there. I'll be live in literally 30 seconds on the same channel. I'll give you the link again. This is the event and all donations made there will go to charity. So We're going here now. I'll see you all in 30 seconds, 5 minutes until data releases, and that's where we're going to be covering the data. Thank you everyone for tuning in. Stay where you are, it'll take you there. If not, check on this channel. We'll be live in literally a minute. Thank you everyone. See you in a second. Bye.